Hello everybody, welcome to Talking About Houses. I'm Todd.
I'm Oana.
Okay, so we just got brand new data, so we're gonna do an update to the Las Vegas real estate market.
Okay.
This is the first update we've done in April. It takes a couple days, the data lags by a couple days. I think Altos Research just makes us wait because they don't want us to have super accurate, but it's pretty accurate. It's better than the MLS because the MLS doesn't aggregate it and give us all this kind of fun stuff. Anyway, so we're gonna start with how the market action index. This is the first thing we always look at. It's 40. It was 39 a week ago.
Okay.
So it went up 1. That's a trend. Things are moving around a lot, which is why you can't just look at inventory. You can't just look at new list prices. You can't look at sale prices, and you can't look at median days on the market because they all factor in, and this needle just basically average them all and says, well, this, all other things being equal, this is how it works, right?
Right, and I think to really point out is, that that spread when you look at the needle about from where it was to where we are, and that's just over the last few months. So that there's been quite a bit of movement. No, what I'm saying is, we were at 32, 33.
Yeah, we were at 32 for like
for a couple months. Yeah, for a couple months. So we didn't start moving until January. So really from January to now is where this needle has moved, and that is a big change over a relatively short amount of time.
What's interesting about market action index is if you look at the chart of the last 5 years, it's the 7-day average is 47. So remember that number that you saw is the 90-day average. It's a smoothed out version because it's looking backwards 90 days and grabbing data, so it's not changing very fast. If you just looked at the last 7 days and you made the last 90 days the last 7 days, it would be 47.
Right.
So that's what why we think this is interesting.
Right.
Because this is starting to move, and then on this chart, if you go back to 2019, it really never got up to 47. It stayed at 40 pretty much the whole year.
Right. So that's telling us where the market's going. The 41, 40, those are telling you where the market is and looking back, but the 47 is telling you where the market's going.
The median sale prices were unchanged pretty much across the board for the week. Like for 1 week, stuff didn't sell for any more than it sold the week before. Median list price, you can see, has crept up a little bit here, and so that the dashed line is the 7-day average, meaning if the last 7 days represent 90 days, the list price. Remember these why are they leading indicators? And people go, oh, but list price, that doesn't mean anything. People can list whatever they want.
Right, but list prices are reflective of what's happening in the marketplace, right? Okay. Because they're taking a look at what's closed, what's under contract, who else is on the market. They're taking a look at days on the market. They're also listening to their agents regarding what's actually happening out there with buyers. Are they making multiple offers? What's happening? So that's why list price is actually a valid metric to consider.
If you look at this median list price chart and you see the drop in list price, the crashers would have told you that would continue, but it actually has flipped around, and none of them would have admitted that could possible to happen with what they were saying. Just want to point that out. We basically called the adjustment, and we pretty much nailed exactly what was going to happen. Inventory, this is the huge thing that's happening. If you look at this inventory slide, you can realize at one point we actually got back to 2019 normal market inventory. It was a normal market in the fall. And then look where inventory is doing. It's nosediving. It's the 3rd lowest inventory we've ever had right now. We have well, at least in the last 7 years. We had another chart that we're going to show you on another video where we show that information.
Okay.
Inventory. Okay. Median days on market. This is a big one. People were complaining about how long things are on the market. Oana, this number is skewed. It's fake higher than it actually is. Why is the median days on market wrongly showing higher? What's causing it to do that? Like, are there people putting their houses on the market for months and months and then taking them off that are skewing this number? So,
this is an interesting thing. So the median days on market, I mean, we do like to watch that, but there's such gamesmanship when it comes to the median days on market, right?
Yeah.
I mean, you have people who, legitimately take their properties off the market for whatever reason. But you have people who also take them off the market in order to play with the numbers, so that they'll take their house off the market and give it a refresh. They'll give it a new MLS number, and if the property's been on the market for 31 days, then that actually resets the
off
number. Right, so off the market. So let's say that I have my house on the market and I'm not getting a whole lot of action. I personally think, of course, my house is better than everybody else's, and so I think my house should sell for $1 bazillion. So what I might ask my agent to do is take my house off the market for 31 days, and then after 31 days, put it right back on the market, and then that resets that count of days on the market. So there's a lot of gamesmanship with this. It is still a useful tool, but it's not necessarily the metric that you should put all your money on.
Here's another thing. As you can see, this is dramatically changing. It does this every year. About every 6 months it changes, turns a corner. Imagine you have your house on the market one day, 5 offers, under contract, and 45 days later, right before closing, they go, hey, something bad happened, I can't get the loan. I have a loan contingency and my loan didn't get approved, so I'm backing out of the house. And you go, fine, whatever. So you say, hey, we got to go back on the market. You go back on the market, you 2 offers, you pick one, and then for some reason the next 30 days they cancel, didn't like something in the HOA. Then you come back on the market, and the very next day you get an offer, cash, that closes in 7 days, okay? And you sell the house in 7 days. To you, you could say, man, we were never on the market. We were on one day, and then we were in escrow for a bunch of time. Then we were on the market for a short period of time. But you know what the MLS doesn't do that. All it looks at is when you listed it to when your final offer was accepted. It doesn't really count time off the market.
Right.
The clock keeps ticking. So your days on market can be completely messed up.
Right. So between those 2 scenarios, you can see why this is a useful tool, but it's not the only tool that you should consider.
Yeah, we look at that when we look at how hot when we're listing somebody's home and they want to know what to price it at. The first thing we do is, what most agents do is they go see what prices are. We don't really look at that first. We look at how fast things are selling, and then we go look at what the prices are, because the fastness of sale is a better indicator for us of what's going on in there than what things are sold for. Because if a person says, hey, I really would like to get my home sold in 14 days, and the house down the street sold for $380, we can say, yeah, it sold for $380, but it was on the market 120 days. So that $380 is a 120-day sale price. You're not going to get that in 14 days probably. It's not like the house just has a price and someone instantly buys it, when it comes on the market. Right. Okay, so here's the summary. Inventory's dropping.
Yes.
Days on market are dropping. Prices kind of still going sideways.
Right. So, we've talked about this a lot, that there was going to be price stagnation overall in 2023. Whether you call it stagnation or stability, whatever word you want to use, but it's really the same thing. Not a lot of change in prices. I mean, yes, you're going to see up and down a little bit, but when you look at the totality of it, prices are just going to stay about the same. Okay.
Now we're going to jump over to the condo market. The market action is 42. It was a whole 41. It went up 1. The condo market's kind of doing the same thing. Prices are kind of going sideways. Price per square foot is going sideways. Days on the market are everything's kind of going sideways with condo market. The most interesting thing we saw here was I grabbed the market action index here. It's 43 is the 7-day average, 41. If you take out the 2 humps for 2021 and 22, we're basically back to a normal market for condos. So it would be, if you look back at 2019, 2018, and even 2020, it never got above 40 really, except for maybe in the spring of 2018. So this is like a normal market for condos. You're back to everything's normal. The only difference is interest rates are higher. But why do interest rates not affect a $200,000 condo as much as $700,000 single family home?
Because condos are more likely to attract a cash buyer. That cash buyer a lot of times is an investor. So that's part of the reason why condos are not as affected by interest rates. Now, I do acknowledge that condos tend to be an entry-level purchase for some people. However, when you look at the numbers bear out that a lot of condos are purchased cash.
The other thing too is condos don't cash flow very well because of the HOA fees. I mean, most people when they're buying like their first investment property, they're either like negative equity a little, or they're just like even, like they're negative cash flow, or they're very even. And so houses are much better properties for cash flow than condos. Condos tend to not be, you can't really get a loan for the whole price of a condo, even when interest rates are low, and then pay the HOA and then expect to make money on the rent.
The problem with condos is that the HOAs tend to be higher than single family homes.
Yeah, I mean, a single family home could be $30 a month, and your condo is probably at least $150, if not more. We've seen condos that were $1,500 in some markets. One thing I do want to point out, when we say houses, it includes townhomes. Condos is only a condo. The difference, explain what the difference is between a house, a townhome, and a condo. Okay, house, by yourself. You're not sharing. You're not sharing anything with anybody except through the HOA. Okay. When you're talking about a townhome, now you're sharing a common wall. Okay, so a townhome is going to be something that is attached to your neighbor. And it could be two houses, not a duplex. Right. A duplex is one ownership unit. Right. A townhome is two separate ownership units that just have a common wall. Right. But or it could be 10. In some cities, you have like 20 of them in a row. Right. Like in some cities, they're called row houses. Right. That sort of thing. And then what changes it to make it a condo? Why is a townhome not a condo? Okay, one last thing. Townhome, so this is like a weird differentiation. There is so much space in the walls that you're sharing between yourself and the neighbor, which is different than we get to a condo. The condo, the walls, you're absolutely sharing the wall with your neighbor. You do not have that same amount of space. I believe it's like 6 to 8 inches that you have in townhomes that you do not have in condos. The biggest thing though is vertical. Right. Condos tend to be vertical, and then so you're sharing more. So you're sharing walls, and maybe you're sharing your ceiling or your floor. And so you're sharing more than the side walls. You cannot have a vertically. You cannot have a townhome with another unit on top of you. It becomes condominium because condominium includes a vertical limit to your ownership, whereas a house you technically own like the airspace above your house and your yard, your property, up to whatever point the FAA or your local municipality says you don't own that space anymore. Like you're limited, you put a super big flagpole back there and they may be able to say you can't do it, but you actually own that space, right? So you can throw a ball up there and and they can't say you violated their space range. So that's really different. So townhomes, if you own a townhome in Vegas, that's included in the numbers for one of our rentals. Just one's a townhome, right? It's a townhome. It shares a wall with another property, but it's not a duplex because a duplex. If you owned a duplex, you own 2 separate living units, but it's one tax ID, right? And you could put 2 tenants in separate things. You could still do that. You could buy 2 attached townhomes, but you could sell one separately. Right. You can't sell half of a duplex. Exactly. Triplex is 3, fourplex is 4. Anything above that's considered multifamily. Right. Okay, but we only talk about houses, townhomes, and condos. I think when we do the videos from now on, I'm going to mention that this houses and townhomes. All right, perfect. Because someone asked, I've had like 2 or 3 people ask that. All right. So we combined single-family homes with condos this time in the market report. What did you think? We usually do them separate. This time we put them together. Does that work for you? Do you like that format? Do you like them separate? Let us know in the comments. We appreciate your feedback. We do read your comments as often as possible, so we really do appreciate any feedback. Thank you for watching. Please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye. Bye.